Welcome back to the channel. Today, we're diving into a crucial topic that could save you thousands of dollars. We're talking about taxes. Now, I know what you're thinking. Taxes? Boring. But trust me on this one, because making mistakes on your taxes can cost you a lot of money that you could be using for investing, buying a rental property, or even just buying groceries. So, stick around to learn about the 5 costly tax mistakes you're probably making and how to avoid them. Let's get into it. Alright, let's kick things off with mistake number 1, not keeping proper financial records. This is a huge one, guys. You know that shoebox full of receipts you've been neglecting? Or that spreadsheet you started but never updated? Yeah, that's not gonna cut it. The IRS requires you to maintain accurate records of your income and expenses. And if you can't provide documentation, you could get hit with some hefty penalties. Plus, without proper records, you might miss out on valuable deductions and credits, which means leaving money on the table that should be staying in your pocket. So how do you avoid this mistake? Well, it's all about establishing good habits. First off, ditch the shoebox method. Instead, create a dedicated system for organizing your financial documents. Personally, I like to use a combination of digital and physical storage. For digital, I use a cloud-based service like Dropbox or Google Drive to store scanned copies of my receipts, invoices, and tax forms. This way, I have access to them from anywhere, and I don't have to worry about losing them if my computer crashes. For physical documents, I have a simple filing system with labeled folders for different categories of expenses. But it's not enough to just store your documents. You also need to keep them up to date. I recommend setting aside some time each month to go through your transactions and make sure everything is accounted for. Trust me, spending a little bit of time each month on this will save you a massive headache come tax time. Now, I know this might seem like a lot of work, but it's important to remember that this is about more than just avoiding an audit. By keeping accurate records, you're creating a clear picture of your financial health. You can see exactly where your money is going, identify areas where you can cut back, and make more informed decisions about your investments. So do yourself a favor and get organized. Let's move on to mistake number 2, missing out on deductions. This one's a real heartbreaker because it's like throwing free money away. The tax code is complex and there are tons of deductions and credits available to taxpayers, but many people simply don't know about them or forget to claim them. Some commonly overlooked deductions include those for home ownership, student loan interest, medical expenses, and charitable contributions. For example, if you're a homeowner, you can deduct mortgage interest, property taxes, and even points paid on your mortgage. And if you're self-employed or have a side hustle, you can write off expenses related to your business, such as office supplies, travel, and even a portion of your home internet bill. So how do you make sure you're not missing out on these valuable deductions? Well, knowledge is power. Take the time to educate yourself about the deductions that apply to your specific situation. The IRS website has a wealth of information, and there are also plenty of online resources and tax software programs that can help you identify potential deductions. Another tip is to track your expenses throughout the year. Remember that system for organizing your financial records we talked about earlier? This is where it really comes in handy. By keeping track of your expenses, you'll have all the documentation you need to claim your deductions come tax time. And here's a pro tip. Don't be afraid to seek professional help. Hiring a qualified tax advisor can be a smart investment, especially if your financial situation is complex. A good tax advisor can help you identify deductions you might have missed and ensure you're taking advantage of all the tax breaks you're entitled to. Remember, maximizing your deductions means keeping more of your hard-earned money. Chapter 3. Filing late. Don't mess with the IRS. Mistake number 3. Filing your taxes late. This one's just asking for trouble. Look, I get it. Filing taxes can be a real drag, and it's tempting to just keep putting it off. But trust me, the consequences of filing late are far worse than just a little procrastination guilt. First off, you'll get hit with late filing penalties, which can be a percentage of the unpaid taxes you owe. And as if that wasn't bad enough, the IRS can also charge interest on those penalties. So basically, the longer you wait, the more expensive it gets. But it's not just about the money. filing late can also damage your credit score, making it harder to get loans, rent an apartment, or even secure certain jobs. So, how can you avoid the stress and penalties of filing late? Well, the obvious answer is to file on time. Mark your calendar with the tax deadline and set reminders for yourself. If you're feeling overwhelmed, break the task down into smaller, more manageable chunks. Start early, gather your documents, and chip away at it little by little. And if you absolutely can't meet the deadline, file for an extension. This will give you an extra 6 months to get your paperwork in order. Just remember, an extension only gives you more time to file, not more time to pay. You'll still need to estimate your tax liability and pay any taxes owed by the original deadline to avoid penalties. Chapter 4. Incorrectly reporting income. Honesty is the best policy, especially with the IRS. Let's talk about mistake number 4, incorrectly reporting your income. Now, I'm not talking about intentionally committing tax fraud here. Most of the time, this is an honest mistake, like forgetting to include income from a side gig or misinterpreting a tax form. But even unintentional errors can have serious consequences. If the IRS finds discrepancies in your tax return, they could audit you. And let me tell you, an audit is not something you want to go through. It can be a long, stressful process, and you'll need to provide extensive documentation to support your claims. If the IRS determines that you owe more taxes, you'll be hit with back taxes, penalties, and interest. So, how can you avoid this costly mistake? First and foremost, be thorough and accurate when reporting your income. Double-check your W-2s, 1099s, and any other income statements you receive. If you're self-employed, make sure you're keeping track of all your business income and expenses. Another important tip is to use tax software or hire a tax professional. Tax software can help you avoid math errors and ensure you're filling out forms correctly. And as we discussed earlier, a tax professional can provide personalized guidance and help you navigate the complexities of the tax code. Remember, when it comes to your taxes, it's always better to err on the side of caution. If you're unsure about something, don't guess. Consult the IRS website, read up on tax laws, or seek professional advice. Chapter 5. Not consulting a tax professional. Sometimes, you need to call in the experts. Finally, let's talk about mistake number 5, not consulting a tax professional. Listen, I know we've touched on this throughout the video, but it's important enough to warrant its own section. Many people try to handle their taxes themselves, thinking they can save a few bucks. And while DIY taxes can work for some, for others, it's like trying to perform surgery on yourself. You might get lucky, but there's a good chance you'll make things worse. Tax professionals like CPAs and enrolled agents are experts in tax law. They can help you navigate the complexities of the tax code, identify potential deductions and credits, and ensure you're taking advantage of all the tax breaks available to you. They can also represent you before the IRS if you're ever audited. Now, I know what you're thinking. Hiring a tax professional can be expensive, and you're right, it's an investment. But think of it this way. A good tax professional can often save you more money than they cost. They can help you avoid costly mistakes, maximize your deductions, and minimize your tax liability. So, when should you consider hiring a tax professional? Well, if your financial situation is complex, maybe you're self-employed, own multiple properties, or have significant investments, then hiring a pro is a no-brainer. But even if your finances are relatively straightforward, a tax professional can still be a valuable asset. They can provide peace of mind, knowing that your taxes are being handled correctly, and free up your time so you can focus on other things, like building your real estate empire or growing your YouTube channel. Thanks for watching. If you found this video helpful, make sure to give it a thumbs up and subscribe for more tips on managing your finances. We're dropping new videos every week to help you make smarter financial decisions and achieve your financial goals. Remember, taxes are a fact of life, but they don't have to be a burden. By avoiding these costly mistakes, you can keep more of your hard-earned money and invest it in your future. Now, I want to hear from you. Have you made any of these tax mistakes in the past? What steps are you taking to improve your tax game? Leave a comment below if you have any questions or topics you'd like us to cover next.